Good morning, good afternoon, good evening, and a warm welcome to Westwood's State of Exploration 2024 webinar. This 30-minute webinar covers highlights from the 15th edition of Westwood's State of Exploration report. We will look at the key themes in exploration performance and activity over the 5-year period of 2019 to 2023, and an outlook for exploration so far in 2024. I'm Shereen Nairne, the Global Business E&A Business Development and Account Manager at Westwood. And like our team of analysts, I'm a geoscientist and an explorer. I'm joined by Graeme Bagley, Westwood's Head of Global Exploration and Appraisal, who will take us through the key messages. However, before we get into the presentation, I would like to briefly introduce Westwood. So Westwood Global Energy Group provides specialist market intelligence across the energy sector. We support our clients with their strategic, technical, and commercial decisions through our subscription-based services, reports and insights, as well as bespoke research and consultancy. Our product suite spans exploration and production, new energies, as well as offshore and onshore energy services. However, today, the focus is on the E&P sector. We have leveraged the data and insights from Westwood's Global Exploration and Appraisal platform, Wildcat, to produce the 100-plus page State of Exploration report on which this webinar is based. It's great to see some of our Wildcat clients online. Remember, you can download the full report and watch the in-depth webinar, which was delivered earlier this month. With that, I'll hand over to Graeme for the key messages.
Okay, thank you, Shereen, and good morning, good afternoon, good evening, everybody. Thank you for joining us today. As Shereen said, this State of Exploration report published a month or so ago now covers the period from 2019 to 2023. And if you look back over that period, it seems that an awful lot has happened in that time. In 2019, we saw, if you like, the first green shoots of recovery following the slump in activity in 2014. But then the price war between Russia and Saudi came in, and that was shortly followed by COVID hitting us in 2020. At the same time, the energy transition started to gain significant momentum. And then, of course, the war in Ukraine broke out in 2022, supplies were challenged, and energy security became the focus for many stakeholders. So today we'll look back about what's been happening over that period in some detail. I'll run through the key messages now, the key highlights, and then Shereen will provide some more detail on the back of that. Now, first of all, in the past, we've seen a pretty good correlation between high-impact exploration drilling and the previous year's oil price. Obviously, companies tend to kind of plan their budgets based on their cash flow from the previous year. But what we've seen over the last year or two is that correlation seems to have broken. So despite $100 plus oil prices in 2022, we saw the fewest number of high-impact wells drilled since at least 2008 at just 65. So why is that? Then what we're thinking at the moment, this seems to be due to exploration capital allocation remaining fairly steady in the face of what is probably uncertainty around long-term demand and the pace of the energy transition. The next one in terms of exploration performance, then what we've seen then is that a more or less year-on-year decline since 2019, in fact. Last year, we only saw 3.3 billion BOE of resource discovered, and the commercial success rates dropped from around about 30% in 2022 to 23% in 2023. And that's the lowest that we've seen since about 2018. At the same time, the mean discovery size seemed to decrease to about 220 million barrels from nearly 500 million BOE in 2019. And again, that's the smallest number of 220 that we've seen since 2014. Now, 2022 was something of an exceptional year for frontier exploration, with record success rates and the big frontier discoveries coming through in the Orange Basin. But again, in 2023, commercial success rates fell back to something less than 10%, with only one relatively small potential discovery in the UK Southern North Sea. And typically, over the longer term, we've seen success rates in frontier exploration running at about 7 or 8%. So that's back to the kind of the baseline norm that we might expect. The next one is that in terms of the exploration landscape and the companies that are investing in high impact exploration at the moment, Again, in 2023, we saw just 68 companies drilling wells, high impact wells, and that's down from 99 in 2019, and in fact a high of something like 172 in 2013. So overall, we're seeing about half the number of companies drilling about half the number of wells in actually about half the number of countries compared to what we had back in the pre-crash days in 2013. Exploration activity continues to be dominated by the super majors and the big international analyses, with the usual suspects of ExxonMobil, Shell, and TotalEnergies topping the list of the most active explorers in the period 2019 to 2023. At the same time, QatarEnergy participated in the most wells in 2023, coming from close to nowhere over the last 5 years, and now obviously being a major player in the high impact exploration landscape. Now, the next one is about what's happening in terms of exploration targets and the impact on the transition in some ways. Well, there has been a lot of discussion about gas being the transition fuel. But what we've seen in terms of phase is that we still see a stronger appetite for exploration for oil over gas, both in terms of exploration and in terms of projects going through to FID and development. So more high impact wells are still targeting oil, and a higher proportion of discovered oil has seen FID than gas. And at the same time, more gas than oil is still showing no signs of progression. So as ever, if you're going to be exploring for gas, you need to find gas in the right places in the world where you have got easy access to a market. Now, cycle times as well are something which has been increasing focus over the last few years, with companies very keen to make sure they don't leave too much oil stranded in the ground. And so what we've seen again is that both high impact oil and gas discoveries are both taking a median time of around about 12 to 13 years from initial license award to first production. So what that means, of course, is that if you're an explorer now taking up exploration acreage in 2024, on a median basis, that's going to be 2037 when you might see first production and first returns on that investment. Clearly a wide range around that, and companies are very much focusing what they can do to reduce the time taken for every stage of the exploration to development cycle. Overall, though, it does seem that oil is still on stream a little bit faster than gas, maybe about a year of those developments that do take place. So on that, I'll hand over to Shereen, who'll perhaps give us a little bit more detail on those key messages. But thank you very much, and we'll catch up later. I think there might be time for a question or two at the end, but otherwise, please put any questions in the chat on Zoom today, and we'll see what we can do to get through to those. Thank you, and over to Shereen.
Thank you, Graeme. So, as Graeme mentioned, high-impact exploration drilling fell in 2023, and high-impact wells are those wells with pre-drilled P50 resource estimates of more than 100 million barrels of oil equivalent, or any frontier play test. Now, only 65 such wells were drilled in 2023, reflecting on a 21% reduction on the 82 wells that were drilled in 2022. Now, by leveraging Wildcat's comprehensive 16-year database, what we can see is that 2023 represents not just a 5-year low, but it's also the lowest number of high-impact wells that Westwood has recorded since 2008. Now, for most of those years, high-impact drilling correlated pretty well with the previous year's oil price, as we see in the line on the chart. However, in 2023, we see a break in the correlation, as the average $100 per barrel oil price in 2022 did not lead to an increase in high-impact exploration drilling. So, as Graeme said, it does appear that companies are balancing their exploration ambitions against the uncertainty in demand and the pace of the energy transition. Now, let's take a look at where that high-impact exploration activity has been taking place. This chart shows high-impact drilling activity per region over the 5-year period 2019 to 2023. From this, we can see that in Asia Pacific, Europe, and the Middle East, activity has been relatively steady, although Europe had an exceptional year in 2019 with 32 wells. On the other hand, Africa has been seeing a steady rise in high-impact drilling since 2020. In fact, it was the second most active region in 2023, with 12 high-impact wells being drilled. And the opening of the Orange Basin in 2022 is a key reason for this. North America was the most active region for high-impact drilling last year, and this follows from a quiet 2022, where just 10 high-impact wells were drilled. So 2023 saw a doubling of activity for North America as companies returned to drill out their commitment wells in offshore Mexico. Noticeably, we are seeing a slowdown in South America. Just 9 wells were drilled in 2023 compared to the 29 high-impact wells in 2022. And this is due to fewer wells drilled in Guyana and Suriname. Now, if we look at this by play maturity, what we can see, as Graeme mentioned, is a record low for frontier drilling, shown here in red. These wells target commercially unproven plays. Only 15 frontier wells were drilled in 2023. However, frontier drilling has been subdued since 2020, where they accounted for around a quarter of high-impact wells drilled. Now, what you can't see from this chart is that between 2012 to 2014, frontier wells were making up about 40% of the high-impact portfolio. Now, Graeme mentioned that of the 15 wells drilled in 2023, only 1 was a commercial discovery. This was Shell's UK Southern North Sea well, Pensacola, a modest-sized discovery in Permian zechstein carbonates. You can find more details on this in the State of Exploration report. So we have seen that high-impact exploration activity has declined, but what about performance? We'll consider that in the next section. So if we turn our attention to high-impact discovered resources, what we see on the left here is that there's been a decrease in discovered resources over the 5-year period. That's between 2019 to 2023. So as an industry, we are discovering fewer oil and gas resources through high-impact exploration drilling. In 2023, just 3.3 billion barrels of oil equivalent was discovered, and this is a 59% decrease compared to the previous year. It marks not just a 5-year low, but also the lowest since 2008. Now, if we look to the chart on the right and consider the mean discovery sizes, what we can see is that this has also fallen year on year, from approximately 500 million barrels of oil equivalent in 2019 to approximately 220 million barrels of oil equivalent in 2023. And this really is resulting from fewer giant discoveries. Over the 5-year period, we saw giant discoveries in Russia and Iran between 2019 to 2021, the tuna discovery in Turkey in 2020, and Venus in Namibia in 2022. And these significantly boosted the mean discovery sizes. So what we see is that exploration performance has decreased as fewer resources are being discovered and smaller discoveries are being made. Now, for another measure of performance, let's look at success rates and finding costs. The chart on the left here shows success rates over that same 5-year period, 2019 to 2023. We can see technical success rates in gray, which average 51% over this period, while the commercial success rates in black average around 27% over the same period. From the chart, we can also see that in 2023, both technical and commercial success rates fell to a 5-year low. Now, if we consider commercial success rates by play maturity, what we see is that 2023 marks a significant drop in performance for frontier exploration, which is shown in this red line. However, this is very much a return to the average commercial success rate for frontier plays, which is less than 10%. So indeed, 2022 is the outlier here. It was a record-breaking year with frontier commercial successes reaching 25%. And for emerging plays shown in green, we're also seeing lower success rates. Commercial success rate fell from a high of 56% in 2019. However, since 2021, we see that that's been more aligned with the success rates for mature and maturing plays, which is shown in blue here. Now, if we turn our attention to exploration drilling finding costs, what we can see is that these costs have been increasing over the 5-year period. Overall, exploration drilling finding costs in 2023 were approximately $1.2 per barrel of oil equivalent, while finding costs for wells that targeted oil and found oil, here in green, were more expensive at $1.9 per barrel per oil equivalent. Now, these finding costs reflect not just the smaller mean discovery sizes that we saw on the previous slide, but also an increase in average well costs. Well costs increased from about 38 million in 2019 to approximately $60 million in 2023. So we've had a look at exploration activity and exploration performance. Now, let's look at a map of the potentially commercial discoveries that were made by high-impact wells in 2023. There were 15 potentially commercial discoveries in 2023, and this covers 14 basins, with 12 of those discoveries estimated to be greater than or equal to 100 million barrels of oil equivalent recoverable resource. And we've highlighted those there in red. Now, the largest of these discoveries was ENI's Geng North in Indonesia, and it's potentially the largest discovery in Indonesia for over 20 years. Westwood estimate the volumes to be more than 700 million barrels of recoverable gas and condensate. Now, we can't go into all the details on all these discoveries and all these wells, but if I bring one up in a Wildcat, just to show you what information is available. And sticking with Indonesia, we're looking at the Layaran-1 well here, and you can see all the data here. The Layaran-1 well, operated by Mubadala Energy, was completed in December last year as a gas discovery, and it's located in the North Sumatra Basin in approximately 1,200 meters water depth. It targeted an Oligocene, a sandstone play in an emerging play. And if we scroll down, we can see the post-drill resource estimates of 250 million barrels of oil equivalent. Now we can see a lot of information here, a location map of the well. We can easily find analogs in the basin and in the play type. We can see the pre-drill and post-drill press releases and Westwood's independent pre-drill and post-drill analysis, which covers the implication of success and failure of this well on the surrounding landscape. Now, we can go into so much detail, but let's go back to our presentation and turn our attention to the high-impact company landscape. Now, if we look at the blue bars here on the left, what we see is a decline in the number of companies participating in high-impact exploration drilling over the last 10 years. So 68 different companies participated in drilling in 2023, and that's down from 165 just a decade ago. And as Graeme mentioned, we're also seeing that decline in the number of wells being drilled, tracking that company activity quite closely as well. So that both are decreasing over the 10-year period. Now, if we look at the type of companies that have been participating in these wells over a 5-year period, what we can see is a decline in the participation of large companies. And these are companies such as Apache, Hess, ENI, Conoco, and Woodside. In 2023, only 12 of these companies drilled high-impact wells. That's compared to 22 in 2019. And why is this? Well, there's been a significant M&A activity as well as a shift in focus. So, for instance, Aker BP bought Lundin, Woodside bought BHP's petroleum business, and Apache shifted its focus to appraisal in Suriname. Now, if we look to national oil companies, what we can see is we've split these into two categories. Domestic NOCs, such as Petronas, which would be drilling in Malaysia, and those NOCs that explore internationally, such as CNOOC outside of China. Now, international NOC activity has been quite interesting. We've been watching that closely over the last few years. and talking about their growth in international exploration. However, last year, only 6 NOCs drilled high-impact exploration wells. Although, based on what we're seeing so far in 2024, this would appear to be more of a blip than a trend. And although fewer international NOCs are drilled high-impact exploration wells in 2023, what we see is that they are very active, accounting for 4 of the top 10 most active high-impact explorers last year. Qatar Energy was the most active explorer in 2023, participating in 13 high-impact wells. And as Graeme said, this is quite incredible. They only started their international exploration push about 5 years ago, and now topping the list as the most active explorer. If we look to a 5-year period, though, what we see is that the 21 companies who participated in more than 10 high-impact exploration wells. Not surprisingly, the super majors are coming out on top here. ExxonMobil, Shell, and Total Energies in the top 3 explorers. Now, another focus for the industry is on resource progression and cycle times. And there's an entire chapter on this in the State of Exploration report. However, we'll look briefly at this now. So if we focus first on high-impact resource progression, the pie chart shows the status of the 395 high-impact commercial discoveries made since 2008. Almost half of these discoveries have progressed through final investment decision, FID, and so they're either under development or in production. However, the other half remain under appraisal, or they are stalled or undergoing further studies due to subsurface risk or above ground risk. If we look to the right, we've broken this down by fluid phase. So you can see that there's a difference between oil and gas discoveries. So 59% of discovered oil is either in production or under development, while for gas, this is only 45% that has progressed to this stage. And Westwood published a dedicated stalled gas report in February of this year, which goes into much more detail on this. So do email us if you're interested in stalled gas. Now, looking at cycle times for these discoveries, what we see here is the medium cycle times have been split by oil and gas, and also broken down by the time taken from license to award, from license award to discovery, from discovery to FID, and from FID to first production. What we see on average is that oil discoveries are reaching FID slightly faster than gas. They get on production about half a year faster, reflecting the complexity of gas developments. There are, however, notable gas discoveries that reached FID in less than 1.5 years, such as Zohr offshore Egypt. So oil discoveries are more likely to progress and progress faster than gas. Now, if we look at cycle times by play maturity, we see something counterintuitive, that frontier plays have shorter cycle times. And what we see is that these frontier discoveries, they're being developed in phases rather than full field development. And in some cases, they're more competitive terms supporting project acceleration. Overall, though, we need to consider these lengthy cycle times as they could challenge net zero targets, and so they should be taken into account. So finally, what is the outlook for performance activity and for exploration activity and performance this year? Well, for 2024, we should see an uptick in high impact drilling activity. 38 wells have already been drilled, and we expect 75 to 80 wells by the end of the year, so returning to the 2022 levels. In terms of region, we're expecting Africa to leapfrog North America to become the busiest region. South America should return to average, and there should be a slight fall in North America. In terms of company landscape, what we see, we know that Qatar Energy was the most active explorer in 2023, and they could stay the same in 2024. They are expected to drill 10 high-impact wells this year, and Total Energy is also expected to drill 10, participate in 10 high-impact wells this year. And that's an increase from the 4 wells that Total Energies participated in last year. So activity for 2024 is off to a good start. And also, there have been 7 potentially commercial discoveries already this year, with a combined total resource estimate of 3.3 billion barrels of oil equivalent. And this already matches the annual total from last year. On the map here, we can see those 7 potentially commercial discoveries highlighted in green, and their resource estimate is shown on the chart on the left. The Orange Basin, Namibia, really stands out, with back-to-back discoveries for Galp at Mopane 1X and 2X, and the discovery for Total Energies at Mangeti 1X. And 2024 has already delivered a potentially commercial frontier discovery at ENI's Nairne well in Côte d'Ivoire. So there's a lot to look forward to this year, and our clients can keep informed via the Wildcat platform, which we update daily. However, if you're not a client, you can still access the State of Exploration report, because companies who purchase the report, they also receive a recording of the more detailed client webinar, which was held a few weeks ago, and also a dedicated discussion with our analysts to discuss the report findings. So I think we may have time for one question, or perhaps not. But thank you for your time.